Last week, that was important, but next week, that is really important because next week, there are some very important themes we're watching, the least of which is the Fed, the guys and gals that we dream about, the people who have the levers of our economy in their hands, the people that are going to change or not change interest rates. They're going to meet this week, but there's so much more because we have earnings. We're still very early in the earnings season, and we have some very important earnings coming out this week, the least of which is we have some more Mag 7s announcing next week, some tech companies. And so we really have to pay attention to what to expect in the week ahead. Let's get into it. Let's talk about what to watch in the week ahead. FOMC meeting. The FOMC meeting starts on Tuesday. You know, FOM Federal Open Market Committee. Those are the boring economists with lots of power who work for the Fed who will meet on Tuesday, and they will have 2 days of discussions, what they expect from the economy and what to do about interest rates, something that we all want to know about. And as I said earlier, we're expecting, most people expect an interest rate cut to come out of this meeting, and but we're not going to know until Wednesday. On Wednesday afternoon, we will get their interest rate policy. We will know if they cut or they do not, or how much they cut, and then they will also tell us policy. And the policy statement, which is a carefully crafted statement, they try to hide these Easter eggs there, so we get to see what their thoughts might be about the future or what they're worried about, right? Are they still worried about inflation? Are they less worried about inflation? And so we get to hear all of that on Tuesday, starting at 2:00 Wall Street time. And then after that, the Chairman Powell is going to have his presser, and of course the pre-prepared statement, as I said, and then of course the questions where the reporters will lay into him, and that's where the real action happens. That's where we get a much better understanding of what the Fed is really thinking, and we get to understand better who are hawks, who are not hawks, and all that other stuff. But we're going to know everything on Wednesday, and that really is the big data point of the week. But looking at the economic calendar, we are still in a government shutdown. So, you know, some of these, what we're expecting in the week ahead, some of these numbers may or not come out. But some of them, we also get some private numbers. We're supposed to get durable goods orders this week. That's a really important one. Durable goods are things that if you drop them on your foot, they hurt. So it's like dishwashers, television sets, cars, things like that. Big ticket items that are very sensitive to interest rates because a lot of people finance them. But they also are a big driver of economic growth and consumption. So we like to follow this boring number, but it's an important number. We may not get that this week. We're going to get some house price indexes in the week ahead. Those are private. Those are important. We're going to see, we will see the Case-Shiller house price numbers. That's a really cool one. We're going to get that. And that really breaks it down in different regions across the U.S. And it's important to look at that, right? Because people talk about the housing market, and it may be a regional thing that's happening. So we're able to really look more closely, get more granularity on the health of the housing market with two of the numbers that we get this week. And of course, another private number that we get this week is the Conference Board's consumer confidence number. Now, you guys know how obsessed I am with consumer confidence. Consumer confidence is extremely important. Let's start from the top. GDP, the economy, is 2/3 driven by consumption. Consumers like you and me buying stuff and services. And if we're confident, we buy more stuff. If we buy more stuff, the economy does well, right? You know my favorite line, right? Confident consumers consume. And when consumers consume, the economy goes higher. So the Conference Board has a consumer confidence indicator, and that's going to come out this week. And that's expected to fall slightly month over month from 94.2 last month to 93.4. It's a small move, but you know, it's a downward move, and we like to track that granularity. We got some numbers last week that were in other sentiment numbers actually on Friday, and those were the University of Michigan sentiment numbers, and those sort of ticked down a little bit. So we'll want to see what's going on here, and that we will get this week. We're going to watch that one closely. What else are we going to get this week? We are going to get, we said the FOMC meeting. Of course, we should get initial jobless claims, but we are likely not going to get it if the government doesn't come back online. And on the latter half of the week, we're due to get another a revision of GDP. Very important, but we're not going to get that if the economy doesn't open. And of course, all the data that comes along with that, personal income, personal spending, those are really important ones because those are directly tied to consumption, what I was talking about earlier, and GDP. So we want to see how those things are going. We're not going to find that out if we still have a shutdown. Also in that big chunk of data is the PCE price index. Now that is another measure of inflation, and that it happens to be the Fed's favorite indicator of inflation. We may or may not receive that by the end of the week. And so it depends on what happens with the shutdown. And so really that's the rundown of numbers we should receive that week. And we will get some. And of course, we're going to get lots and lots of earnings this week. And I'm going to talk about that a little bit more in a second. But generally speaking, I want to say that the market, for the most part, was very, very positive this week. And, of course, we don't know. There's still rumblings under the surface about, of the economy. So, things are clearly not in the clear. But some of the indicators, the few indicators that we can follow, we are seeing, positive health in consumers are healthy. But there are challenges in the credit, in the sort of the credit areas of the economy. We have to worry about that. We don't have a lot of granularity on employment data, and that's really important because if people really are starting to lose their jobs, that could be a challenge, right? We had Target last week announcing 1,000 job cuts at the corporate level, and they're going to close up another 800 or so. So that is a drag on employment. Now, 1,000 jobs from Target is not going to affect the U.S. economy. However, it could be a canary in a coal mine. So we have to watch that carefully. We're going to get some more retail earnings in the weeks ahead. We know that retail is going to be under pressure because as they sell through their inventories, they're going to start having to rely on fresh inventory, which will have tariffs, right? So we know they're under pressure. Question is, how are they going to respond? Are they going to be able to pass it along to consumers? Are they not? But that is a hugely recurring theme. But Target is somewhat unique because Target has been struggling. They've been struggling because they've had some management missteps, and they're planning a big turnaround, which we've not been in receipt of as yet. Are we in receipt of it? Crickets, not yet. But they are cutting jobs, and that's something to think about. So generally speaking, it was pretty good. Let's just go through a couple of earnings from last week that I thought were interesting. Intel came out with their earnings last week, and they had a huge beat. And, Intel, as you know, has been really, really struggling. They've had a lot of management missteps. Namely, they completely missed the whole AI trade. Intel, a fantastic old American company with so much great possibilities. Intel really struggled because they missed a couple of very important strategic moves. So Intel has been under lots of pressure in the past couple of years. The government this year has taken an interest in Intel because Intel is a great American company, and there are hopes that Intel could be the stand-in for TSMC, which is the largest manufacturer of silicon semiconductors. They're based in Taiwan. And so we would like to see a little bit more spread out diversification of such a critical part of the ecosystem. Intel could be that company, but right now the company is struggling just a bit to find its legs. Now, it's important to mention that this computer has an Intel chip in it, and so does probably your computer at home. And so Intel still sells a lot of stuff, still a great company, But remember, in the world of growth, we're expecting companies to have their stuff together. That's the polite way of saying it, for the future. And it hasn't appeared that way. However, they have made some very positive strides. And interestingly, you see companies like even OpenAI invest in Intel, right? Because we're trying to really sort of get Intel back on their feet. It's also important to mention that TSMC, the Taiwanese company, is also developing lots of resources here in the US. Another positive for the president is deal making and investing quite a bit of money here in the US for good reason, So that's an important theme right there. And so Intel had a good quarter. That's positive. Can the turnaround hold? I don't know. They're still taking handouts from the government. That's not a positive sign or a negative sign. I think it's negative, but it's really going to be up to management where they take it, what they do with it. Now, Tesla, that also came out this week. It's important. It's important for two reasons. One, because everyone watches it. Tesla is interesting. It's a bit of a meme stock. I look at it as an auto company, right? As an auto company, it's struggling, and it has been struggling, right? Because not only are they an auto company and have the same pressures of auto companies, but they only make EVs. And EV demand, we saw a spike, and then we saw a pullback. Now, Tesla, again, an important part of the S&P 500, whether it's a meme stock or not. It is one of the largest. Cap companies out there. That means it impacts how the S&P 500 trades, and so we have to follow Tesla whether we like it or not. Tesla is a very interesting story, right? Because obviously their growth story, goes far beyond automobiles, right? Tesla is in robo-taxis, autonomous vehicles. It's called AVs. They're also looking to be a leader in actual robots, like human type robots. And of course, AI, and in typical Musk fashion, there is a lot of blurriness between the lines of all of his private investments. And Tesla is seems to be the indicator of all that activity. And so we pay close attention to Tesla, whether you like the stock or not. And they had a pretty bad earnings announcement, and it was a little bit surprising because we were expecting it actually to be good on autos, because they came out with their volume numbers earlier this month, and they were really, really strong. They beat expectations, and it turns out that a lot of people were running to buy those Teslas before that EV credit ended, and so that really sort of gave them a big push in terms of sales, and their sales actually beat as a result of it. But their earnings per share missed by a mile, and that was really, really not good. The company initially reacted by trading off on the night of the earnings, after market, after hours. But by the next day, guess what? It traded up and it closed in the positive. And honestly, me and a lot of my colleagues in the industry are kind of scratching our heads. The truth is that this is a meme stock, and no one really wants to bet against Elon Musk, and I don't either. You may not love the stock, but you better not trade against him, because you never know what he can pull out. And that was Tesla. That came this week. And Tesla also is the first announcer of the Magnificent Seven. And the Mag 7 beyond Tesla is mostly, except for Apple, mainly focused on AI, right? So that is the superlative index that people like to watch in terms of growth, and Tesla's part of that. So, okay, Tesla's out. They missed, but it shouldn't have an impact on what we're expecting from the real tech companies like Microsoft, Apple, NVIDIA, et cetera. But now that we're talking about cars, let's talk about GM, right? Because GM came out, and we are expecting automakers to be really struggling right now, right? Because we heard that all the big tariffs that are on these companies that produce overseas in Canada and Mexico, elsewhere. And we know, because they've been making a lot of noise saying, oh my God, this is going to have huge impacts on us. We're going to have to raise prices. You see it in commercials, actually, right? Where companies are like, come buy your car now because tariffs are going to make them go up, and let's sell through our inventory, right? Great marketing, right? And it probably helped them a little bit, actually. But the reality is if you take a step back and you look at the actual tariffs that are on the auto industry, the actual ones, they're actually not as bad as you would think, right? Because there are a lot of exemptions that are out there, and it's very complicated. But if you start to look closely at it, and we have, the tariffs are not as stringent as you might think. GM, they came out with a nice beat this week, and that's important. That shows that the auto industry is strong. Ford also came out very strong. A lot of these companies are still seeing strong demand for their trucks, as you probably aren't surprised to hear. We do that really well in the US. And so those came out, and that shows signs of positive. We also had Netflix this week. Netflix is really important in that though it is not a technology stock, it is a very highly prized growth stock. Everyone looks at it. It is a communications stock, but Netflix actually came out with a miss of their expectation. They came out with $5.87 a share, and analysts were expecting almost close to $7 a share, the consensus estimate, and that's pretty weak in terms of revenue. They were flat. But they continue to grow revenue. They're going basically global expansion. The story was okay. But look, Netflix, it's one of those stocks. It goes up and down. They have a good quarter, it goes up a lot. They have a bad quarter, it goes down a little bit. And the truth is the general prognosis is it's still pretty positive. So if you love Netflix, this week might have been a buying opportunity. And a lot of people did rush in to buy it. I saw some of that activity going across our desk this week as well, because possibly it's down for the wrong reasons. So, that was some of the big highlights of the week in terms of earnings. And next week, though, I'm going to run down the quick list here of what we're expecting for earnings next week, ones that I'm going to be watching. And I want to take this time also to say that, if you like this type of content, make sure you click like and subscribe, because we're putting this stuff out every day. And I'm talking about these earnings, and I'm talking about these numbers. And we're going to be posting videos like this every day on what's actually happening during the day, right? So you don't have to wait for the weekend to hear what happened. You could follow it as it's happening. And if you're so inclined, you could actually trade on that for the week ahead. So, click like, click subscribe, and make sure you turn on notifications, right? Because you want to know when we drop a video, and we drop lots of them. Anyway, that's my shameless plug. But that said, let's look at what I'm expecting in the week ahead. So we have some important ones this week. Let's talk about Whirlpool. I talked about durable goods and those things hurting your toe. We're going to get that. Nucor, which is a metal manufacturer. We want to hear about what's going on there. F5 is a internet security company. We want to definitely know what's going on there. Welltower, a medical REIT, highly focused. A lot of people look at that. Cadence Design Systems. Cadence makes software for designing chips. So anytime we can get any bead on what's going on in that sector, we certainly do. So we look closely at that. DR Horton, a builder, we're going to look at. Wayfair Retail, that's a big one. That's going to come out this week. United Health Group, we have to focus on that, right? Because healthcare, also another highly focused on industry with lots of potential there. Ares Capital comes out this week. Ares, a private lender. We talked a lot about that. We're also going to be getting, Sherwin-Williams. That's a good one to look at. JetBlue Airways is coming out this week. American Tower, that's one to watch this week. Let's see here, going down the list. Live. Visa, another one that's coming out this week, and we want to watch that one carefully for all of their, not just their card business, but they do so much more at Visa than just credit cards. But that's definitely going to give us an idea of how healthy the consumer is. And again, I don't want to get into my rant and tirade about how important consumers are. Kraft Heinz this week, Boeing also this week, GE Healthcare this week, Etsy, retail, very important. Verizon Communications, we got AT&T last week, but Verizon, pretty broadly held stock. It's held mainly for dividends. Caterpillar, a really good way of figuring out what's going on with international relationships. They sell a lot of product overseas, specifically in China. And so we're going to watch that carefully. Also in the week ahead, guess what? Meta platforms. So we get Meta coming up and we want to look at that. eBay. We have MGA Resorts International, another big one. So you can start to see some big ones are going to start coming up. Teladoc, Starbucks, also out this week. Boot Barn, another highly watched stock. Merck, we definitely want to see that. That's an important one as well. Hershey, also out this week. Roblox, Builders First Source, right? That company has been struggling a lot, but that company did really, really well for a long time. That is highly tied to the building industry. We're going to get Biogen. We're going to see Eli Lilly. That's another big one, another big growth story out there. So we're going to get also MasterCard is also coming up this week. Xerox also, International Paper in terms of industrials. Guys, there are so many. I could just keep going. The important message here is you better pay attention to this week ahead. That means pay attention to the news, definitely read our notes, listen to the morning, our morning takes, listen to our afternoon closing takes. They're all there for you so you can follow it during the week. It's extremely, extremely important for you to follow those this week. And this is the place to do it because we do it, and I hope we do it in an entertaining way with at least some flair, and we keep you entertained. And that was what we're expecting in the week ahead. You need to pay attention to that because you, my friends, you want to be first online to make sure that you're the smartest person in the room. And this is the place where it all starts. Make sure you click like and subscribe because a lot of stuff is going to unfold in the week ahead, and you'll hear about it here first. Remember, at Truth Bombs, we drop them here before the market even figures them out. Thanks for checking in with Wall Street Truth Bombs. Remember, we drop them here before the market figures them out.